And good evening. This is the Eye of the Storm podcast with the big picture, technical picture for the SPX and the NDX, and in the futures market, the S&P 500 and the NASDAQ 100. Beginning here with the SPX, the cash market for the S&P 500, I am showing the alternate view, which remains a strong possibility. In fact, if I had to give it a probability or put it on the probability scale between the preferred and the alternate, they continue to have about a 50-50 chance of either one actually being in play. So let's try to update that picture as to where we are within these particular moves. And what would the resolution be and what that may or may not look like? Here in the SPX on the daily chart, I've marked it where that July end of July high at 46.07 was the completion point for minor wave 3. Under my preferred count, it is going to be, it's a minor wave 5, an intermediate C wave, and a primary B wave. We'll get to that in a bit. So I'm going to bring this down right away, bring it down to that 4-hour chart, and we're going to see what happens in between. It gets a little sticky, but what I want to show right off the bat is as our fibs. Our fibs for a minor wave 4. First of all, Elliott always wrote about and told us that a fourth wave, when in progress, will find its terminus, its endpoint within the price territory of the fourth wave of one lesser degree. Well, being that this is minor, we're going to have to go down to the minute, and there it is right there. Now, Fibonacci-wise, the most common retracement for a fourth wave is 0.382. Well, that's right here at 43.40, which happens to be right within, now close to the terminus or the endpoint of that fourth wave of one lesser degree. So we still have an additional 125 points that the S&P can drop and still remain within the possibilities that a minor fourth wave is what that low will present us, and then include an additional run higher to an additional high above 46.07. And again, we'll talk about those highs once I move over to the futures market. But let me go down to the hourly chart so we can see, because this has not been an easy count under each. So either if you're even looking at the preferred count, which I will in just a moment, it's not an easy count, but it's turning into a triple ABC pattern. I believe it's called the WXYZ nowadays. But being that I've been studying Elliott and using Elliott since the late 80s, we would call it either a double or a triple ABC. And this one's turning into what I would mark as a triple, as follows. This is on a minute degree. ABCX, ABCX, AB, and we're in that C wave. And that C wave can most certainly bring us down to here. What it's going to show is that the largest is going to be within this C wave, right? 1, 2, 1, 2. We start to drop pretty quickly. And then, but I'll tell you what, once it's complete, if indeed it is the alternate view, this thing's going to go through the move. It's going to just turn around and go. So we're looking from 43.40 or ish down into that area. It goes back about 46.06. And in that case, we'd be looking for it to go above 48 or 40. The possibility would arise that it could get itself above 48.18, which is the all-time high for the SPX. So that remains in play. Downside still is expected. Now, I'm going to go over to the futures market. I'm going to take a look again on an hourly chart. What we had here is a pretty clean expanding triangle. Now, could that have been the case on the SPX? Well, I got to do it correctly, don't I? That we had this, and then we kind of went into it from here. Got an ABC, and this is being marked as an X, And is this an A? Is this, see, it doesn't work out. So let me just let's just do a comparison, right? Where I'm marking as wave 3. This, in the other one, it's an ABC to here. This is an X wave, and this is a wave A. So let's go back over. Let's just take a peek, because if wave 4 is a possibility that this is all done, right? A, E, see, it doesn't fit within the futures market or within the cash market as cleanly as it does in the futures market. So we've got a little bit of a conflict, which gives the leg up, I got to tell you, to the preferred count. How it's going to actually translate over into the cash market, I'm just not sure yet. So here we are. Preferred count 1, 2, 3. We had an expanding triangle for wave 4, which, by the way, read up. It is totally okay. Contracting, expanding exist, and here is the expanding version. So we have the wave 3, and then we have an A, B, C, D, E, wave 4, 1, 2. And we're dropping again, 1, 2. So here as well, if I'm looking for a minute wave 5 to bring us down to 44.14 or 43.33. So we get a little bit of interest there. We get a little bit of like, how could this all match up? Again, these are for upside, but if we're looking for, which I'm not, but if I'm just looking for the first leg down, I'm looking to count 5. So again, what really works against this being the first 5 down, it's the length and the time spent here and here and here. When you're really looking for more of this type of activity coming off of a primary degree high, I'd be looking for more of this. Now I'm only getting it 1, 2, 3 times. So in reality, it could be, well, there could be a lot of things. It could be telling us a lot of different things, but it's this expanding in the middle of it that kind of just really tosses it off. But then we start to decline with some strength. So what would I be looking for on the preferred? I'd be looking for this wave 5 to continue. And where can it come in? Well, here we have minute 5 as compared to minute wave 1. It's already gone down and it's touched and closed above the equality mark, which was 44.64. Now, what comes after that? 1.618 at 44.14. Now, that would push, because there's still enough premium in this September contract against the cash. The cash would be under 43, under 4,400, I should say. If it got down to here, it would be under 4,400. And so it would be closer to its levels. But here, we'd be looking for that first wave to kind of complete down into here. Now, this is matching up to the minor wave 4. So minor wave 4's low is right underneath all of that. And it's also an acceptable point to where this all could have stopped. Again, an additional triangle pattern. So we got a zone 44.14 down to 40. Well, let me see what this low was, 44.12. So it's all in the same area, $2-3 apart. And then a break there drops us down to 43.33. And that actually could happen. I just bring this back down to the hourly chart. If we got a 1, 2, 1, 2. All right. And let me open that up just a little bit so we can see it. 1, 2, 1, 2, 3, 4. See, it starts to get ugly again. So that's what works against it being a 5-wave structure versus just being and constantly corrective. But even under the alternate, I'm looking for this C wave to be 5 waves, right? Under the alternate count, what we're in is a C wave down. It should be 5 waves. So is this 1, 2, 3, and that's a 4, and this was the 5, and that was wave 1 of 5, and now we're bouncing up on a 2 of 5, and we're going to come back in a 3 of 5, a 4 of 5 of 5, do all of that. That's very possible. So if you're following me here, right, I'd have to go down off of the hourly down to maybe the 15 to see what the internals were here. Could I count 1, 2, 3, and this is a 4, and then we just had that last 5 that brought us down to that 44.59, 44.60 level, and then we just launched up in a small wave 2, and that would be wave A, wave B, and now we're going to jump back up, end up somewhere up here, 44.94 to 4,500, and finish that small wave 2, and then start to decline again in the third wave. Very possible. Very possible. So ultimately, we're still looking for the completion point of one or the other. That's why they remain joined at the hip, so to speak, in terms of what can happen. So, moving averages. We start by looking at them off of the daily. You can see that it's playing, right? We've now got a close. They're getting close to violating or moving below the daily 50. This is an EMA, not an SMA, an EMA, a little bit different. But still, we're below the 20, we're below the 8, we're below the 4. Now, and the 8 and the 4 have both sunk below the 20. So that's starting to line up for continued downside. But of course, what's going to push it even further is if it starts to break the 50 and continues to go lower with the 20, the 8, and the 4 getting itself below the 50. That's going to give this a stronger little shove lower. So don't forget this. We could get a very extended fifth wave. I didn't really see a clean extension in the third. We can get a very clean, more destructive extension here in the fifth wave. Wave 1 is the shortest. So wave 3, that rule is not being broken. But wave 5 could certainly extend and be the longest wave here. So again, I'm not going to try to take the technical picture and match it up with a fundamental picture. Just not going to do that because it doesn't work. But there's plenty out there that would contribute. It's like, okay, everybody out of the boat. We're all going to continue to get out of equity positions or roll some of them. So in other words, it's like a lot of that volatility trade, which we've talked about in depth, kind of got reversed a little bit during the week. A little bit of a stronger upside move that we had here, although it didn't end up, but they reversed a lot of things and then had to reverse them again. So if we see that the volatility trade, which would be the dispersion trade, if it's going to move to where they are buying the volatility index, volatility, so they're buying the VIX vol, they will be selling the components. And we did see that on Friday in the NASDAQ. What crimped its game plan was the strength that was revealed within the Dow. And that came through a little bit different. But again, was it a dispersion trade that was really just rotating and being put on in Dow stocks? I don't know. And I'm not going to postulate in terms of that's what took place. But you see certain things kind of happening to what actually takes place. So on a moving average basis, a continued decline. We've got that daily 50 at 44.53, 54. A break below that should actually put a little bit of support, not under the market, to a stronger decline taking place. And that would drive us down to that 44.11 area. 44.14, 44.11, right in there, which is a zone. And if we get a close below, then I would look for the next day to drive it even further. So we could have some strong down days here. We really can. And then the count may make itself clearer. Or in terms of, is it going to be the preferred? Is it going to be the alternate? Right now, they're running together. Right now, they're both basically showing the same thing, that we should see some continued downside before one or the other actually falls into place as being in progress. So over in the NDX, kind of the same picture, but not as clean. I mean, not that the SPX is really all that clean, but here again, if this high, so that would have been the July 19th high, which was at 15,932, completed only minor wave 3, then what are we in? I'm going to bring it back down. Let's take a look at the hourly chart. There we have the 5th of 3. We have an A, B, C, X, A, B, C, X, A, B, C. So even, you see, right? The NDX, the cash market, and the futures market, which are running on 2 different Elliott wave counts, both are showing that we really should see additional downside. And we might get a little bounce. It might just decide to bounce it. But before all is said and done, by tomorrow, U.S. close, we should be lower and likely substantially. So another 100, 200 point down day to kind of start to get even if this is A, B, and we got a C, A, B, and we get a C wave down. They're both indicating lower levels before all is said and done within this. Now, hourly, NDX, 200s on top, 50, 20, 4, 8, and 4. This thing is in alignment to go down on the hourly chart. Let me pull this open on the daily chart and let's take a look. On the daily chart, woo, same deal. We got the 50 at 14,931. And so we're close. A 30, 40 point drop in the NDX pushes the market below, the cash market below the 50-day moving average. That'll give a little input. That'll give a little oomph to sellers continuing to sell. Again, above we have the 20, the 8, and the 4 in alignment to continue to go down. If the 50 joins the party, these 3 have to drop below that 50. Then we're going to have a pretty strong clue that we're heading for that 200, which again is 13,635. So you can see that as this starts to build, it will build on itself. Let's go take a look at the futures market. Put in the right symbol, and I might even get a good deal. Now, granted, this is all before the future actually opens. And right now, I'm not sure if these are actually, they're putting in their quotes, both just a little bit lower. So I guess kind of interesting. We'll see what happens. In the NASDAQ future on our daily, here again, we're sitting and we're looking at this thing sitting. It did break, but it managed to close above its daily 50. So the futures market has already tested that 50, sits right on it at the moment. So we might see a little bit of a higher opening, but where's that moving average? That moving average is sitting at 5103. Right, 5103. Let's see what they're doing. 5103. Going to try to hold it above it so that it doesn't collapse. I don't know. But an opening doesn't mean anything, to be honest with you, but we're going to see. Now I'm going to bring it down to the 4-hour chart, and we're going to look here, and we see that we have 1, 2, 3, ABC. It was a strange 4, but that's how I'm counting it. Right? An irregular B. That C should have gone more, but it actually did surpass the 1.618. So it kind of fits. I don't particularly care for it, but it works. And then we're in that 5th wave down, and we've now broken below the lows. And so what we have is 0.618. And again, this is minute 5 as compared to minute wave 1. 0.618 is where it's hugging. Equality is at 14,862. Underneath that, actually, 14,862. And then we also have right under there is minor wave 4 out here, which is at 14,830, we're going to call it. So we've got that support between 65 and 30 on our charts. So 63 and 30 all right in here, all the way down. Actually, let's call it even a little bit higher, 55 to 65. And that would, I think, maybe complete a third, maybe complete a third, maybe not. We will wait and see. And if it does, then we're going to get 3 of 5, 4 of 5, 5 of 5. And we're looking at actually where minute wave 5 would be equal to 1.618 of at 14,505, and that would be of minute wave 1. That fits pretty cleanly. 1 was a nice, decent 5-way structure down. 5 can be a nice, decent 5-way structure down, and it'll make up for this crappy wave 3 and all of these different elongated corrective moves that were just too crazy for words. But there was a lot of things going on in between, which allowed for this. This one more so than this one. This one was very, very difficult, but nonetheless, we survived. Now, I will share with you, as I did during the week last week, as far as trading goes, these were fabulous days. These were great trading. We sunk, we rose, we sunk, we rallied, we nosedived, we rallied and rallied, we killed it, we rallied. So as long as you want to get that and you're able to play both sides, wow, decent money is to be made as in day trading. And again, I know I said that last week, I'm going to say it again today, and I'm hoping that continues. Now, if you're a position trader or even a swing trader, it's not necessarily your friend, but as a swing trader, maybe shorten your targets, shorten your, what you think is going to happen, because you're going to have to catch these moves, and they happen very quickly. So tighten stops, et cetera, because you don't want to be giving back a large chunk of money that you've just picked up while they decide they're going to run it all the way back up. All right, so that support remains. Now we're looking like we're going to open around 15,093, which is down about 10. And that brings us right back down to this level. 93 down to 85, I think it is, 82 on the hourly chart. A break below, that would be a break below 15,031.32, which was the low from Friday. We're going to be looking at 14,800. So again, we got a 300 point drop. 250, 300 could work very cleanly. Ultimately, we can drop all the way down to 14,505 in a minute 5th wave, which would complete then minor wave 1 or minor wave 4. These do run together, and we're going to have to hang in there and see. And unfortunately, on an Elliott basis, what really is going to have to happen here is that we're going to have to wait and see what the reaction of all of that's going to be. Are we going to start breaking levels that are going to suggest that it's not a wave 2, right? So again, if it's wave 1 down, we'd be looking for a wave 2 up. And a wave 2 up should not break back above 16,000. Remember that high, 16,062, should not break above it. It should stay well below it. So we got that on board. But a wave 4, putting it into a minor wave 5, you'd be looking for it to break all the way up to here. This is the all-time high. But I'd be looking for minor wave 5 to get itself up to here. Both are running congruently. For tomorrow, I am considering and looking for additional downside. I will state that. I'm going to leave it at that. And moving average-wise, again, on the hourly chart, lined up for continued downside. We got it pretty much down here at the bottom. You're going to see, let me just get this opened up a little bit. You're going to see that they're kind of going sideways, but the 20 just starting to turn a little bit. These heading lower, lower, the 20, just getting a little bit of a turn. But if we open down and continue down, then I would suspect that they're just all going to continue to follow along. And that's where I am going to finish it for today. I continue to pay a very close attention to the Treasury markets. And just so that you all know, I am considering that the Treasury markets are very close to putting in a near to midterm low. And I would be expecting a turn higher in bond price, lower in yield. And I'll hopefully get something together to post here on YouTube early in the week. All right, so that's where I'm going to end it today. Our next update will be an Elliott Wave update, and that will be on Monday, August the 14th.